Hey, what's up, guys? If you're a person that's trying to get a 750 or higher credit score, then this video is for you because you got to pay attention to what I'm going to share with you because you have a better understanding. Because a lot of people, they're getting their credit fixed and everything, but at the same they don't know the difference between their credit score and their credit reports. And this is something that's very impactful in terms of determining what type of trade lines you have on the credit report and if you're going to be approved, okay? So you need to know the difference between the credit score and the credit reports. So first thing you need to understand about the credit score. Now, I know a lot of you all say, well, Houston, I already know what makes up a credit score, which is your payment history, the debt amount that you owe, the length of the history, the credit mix, and the new credit, right? But here's something that you don't know that's confusing people. See, people are confusing this length of credit history with this payment history because they think that the length of the history, like you say you get an AU, that's 20 years old. So you're assuming that the length of the history is being a more of an impact on your credit, which is not as much as the payment history. So you may have a strong length of history. And I'll tell you another thing that a lot of people aren't telling you. These days, a lot of the credit bureaus, they're only going for is 2 years of showing up. If you check your credit report, I promise you, you're going to only see 2 years of credit history. Now, it may show that the account has been open for 20 years, but they're only going to show 2 years of payment history. Okay? So that's the reason I tell you your payment history is more important than the length of the credit. So your payment history, so you may have a new account that's maybe nine months old, but you're constantly paying and stuff like that. You're not missing any payments and stuff. And you may have somebody that has another account that's older, but they may have missed one payment, right? And they may have missed one payment in that 9-year period. So the thing about it, it's going to have a more of a negative impact on your credit. So that's the reason that a lot of people are getting this confused. So that's the reason people look at their credit score and they may go to the Vantage, right? So they may go to Vantage or they may go to FICO, okay? Oh, so a lot of them don't know. We just had a client. He kept telling me, oh, I have a 700. I have a 700. So then I said, okay, what does the bank say? What does the FICO score say? And the reason I tell him what does FICO score say is because FICO is what the banks use. So he went over here and he was at a 610. See, Vantage was amping the situation up, and this is usually coming from the data of Credit Karma and everything. But when he looked at his FICO, this is what the banks were saying. This is what Vantage, because Vantage, most of like your credit unions and stuff. But when you're talking about traditional lenders and stuff like that, they use FICO. So that's the reason that I tell you all you need to see your real credit report, because with your Credit Karma, you're not getting those accurate numbers. And I'll tell you another thing that I said in a previous video. If you have a Vantage score, right, like a medical bill, it can be, a medical bill can be less than $100. On a Vantage score, on Credit Karma, they're going to count it against you. A medical bill less than $100 on FICO, they're not going to count it against you. So these are some things that you really need to understand about your credit score, okay? Now, let's talk about the credit report. Now, the credit report is all about your data, okay? And this is more important than this credit score. And I'll tell you why. Because if this data isn't accurate over here, then I don't care what the credit score may be saying over here, you will still get denied because it's misinformation. So sometimes a lot of credit bureaus, because they're steady picking up data and stuff, you may have somebody with the same name and the same zip code as you, and it ends up on your credit file, right? But you're like, hey, that's not me, right? So being able to prove that that's you so you can have accurate data. The amount of accounts that's on the credit file. That's another thing. Like, most people are like, well, I only have, I have 10 accounts or whatever. But if you, like, especially if you're trying to get like a mortgage and stuff like that, if you have at least 4 accounts, okay? 4 accounts, you can get a mortgage. Sometimes they'll even accept 3 accounts or no account. It just depends, all right? But the thing about it, so with those 4 accounts, which ones will get you a 800 credit score? Because I actually have seen clients that had new credit files, just came out of prison. They never used their social or anything. So put 1 account on it and they went up to an 850, right? So they inherited somebody else's credit file, so they got an 850. But it was only 1 account. The thing about it, that 1 account was not going to get them approved for credit, okay? So you're going to have an average, I would say about 4 accounts, okay? Now, most people, they think they have to have a lot of credit cards and accounts in order to get approved for mortgages and stuff like that, and you don't. Like I said, 4 accounts. So you may have a department store card, you may have a car payment. And like now with the credit bureaus, Experian and Experian TransUnion, they have where you're able to report your phone payments and stuff to help boost up your credit score too. So they're looking at what are you doing with your bank account? You're paying your bills and stuff on time like that. So that helps enhance your credit score and stuff. All right. But at the same time, when you're trying to get a house, you don't need a whole lot of credit line. If you had just 3 to 4 accounts, you'll get approved. They're looking at, okay, what's your DTI, your debt to income ratio. So you may have credit cards that have like maybe $300, $400 on them, right? Okay, but you're making $80,000 a year. Guess what? You only have 4 accounts on there, and you still qualify. Now, somebody can have 10 accounts, but of course, if those credit accounts are maxed out, those credit cards and accounts maxed out, they wouldn't qualify. And for most, like with FHA loans, they're accepting what, a 580? So you can have a 580, and you have to have, they can be collections on there, but they can't be reported within the past 2 years. All right? But if you have a 580, you still can get qualified for a mortgage if you have collections on there and they haven't reported in the past 2 years. So you still can get a mortgage. So don't let that stop you from getting a mortgage. All right. But at the same time, here's something that also hurts a lot of people. This. So with the credit reports, like I said, they're looking at the personal data, your name, your address, your employment. Those are the main factors and stuff, because you may have had 1 job. I'll tell you another thing that will get you denied credit too. Like most people, they would put on their SSI, okay? But they may have like a side business, or they may be on disability, veterans disability or something like that, right? But they have a side business. It's better for you to actually put your business on your credit file than this SSI, because a lot of lenders look at that and they say, well, you have limited income, we're not going to approve you. Or they'll approve you, but they're probably going to give you between $300 to $500. So you won't be able to get a whole lot of money just because this is what you state as your income and employment. So you don't want to put this here on your credit file. Start a side business and put the side business, your company, on there instead of this. Take this SSI off, because that's another reason that, or you put on their retirement. Don't do that. Take this off. Don't put on their retirement. Don't put on their disability. Do not put that in your credit file, because you're going to get denied, okay? Or you're going to end up with low limit credit, okay? Because this is what you put in your credit file. So that's very important. The credit accounts and stuff, okay, we talked about that. Now there's inquiries. Again, if you go over this, 8 inquiries within a 12-month period, that in itself, and especially, it just depends on which credit bureau. Now, if it's spread out 8 inquiries over 3 credit bureaus, then you're fine. But if you have 8 inquiries on Experian, all in a 12-month, you're more likely going to get denied, because they're like, hey, what's going on here? All right. Also, opening up too many new accounts is also will actually get you denied. So if you want to learn more about how to restore your personal credit, if you want to learn more about how to properly set your company up, and a lot of people are going to need to start setting up new businesses with us going into this new recession, click the link below and check out 3-Way Funding. Also comment, like, let me know what you